Yo, what's good, guys? It's been day 5. I'm back with another video, okay? I'm going to educate you guys as I promised myself that whatever I know, I'm going to teach you in simple and easy way, okay? As we all know that we have learned about buy-side liquidity, we've learned about the sell-side liquidity. We also known about the imbalances, okay? So in today's video, we are going to talk on combinedly how to merge these two topics and like have the perspective of watching the price with these two main things, which are the buy side liquidity and sell side liquidity and imbalances. Okay, we are going to combine it together. So now, okay, let's go and get into the charts to understand it more better. So we are definitely going to talk on the internal and external range liquidity. Okay, so let's go. We have the question we ask before getting into the topic, which is like, what does price do? So the question is definitely a great question, but the answer is simple. Price does two main things, which are draw towards external range liquidity and rebalances into internal range liquidity. These are the cycles price actually do. Okay, so now what does it mean? What is external range liquidity? So external range liquidity is simply above the highs, swing highs, okay, and below the swing lows. And internal range liquidity is simply the fair value gaps. Okay, we are going to understand it more in depth, of course. So what is external range liquidity? As I told you, external range liquidity is basically the liquidity that resides above and below all highs, and swing lows. Okay, so now we definitely have talked about the swing highs and swing lows. So you all know about it because swing highs and swing lows liquidity resides above it, so it's called buy side and sell side. It's very simple, I told you. And then the market tends to move towards these points to take out these top orders of traders that exist on these swings. Okay, so that's the main purpose of external range liquidity, and we have the internal range liquidity. On the other hand, the internal range liquidity are the fair value gaps, which are the imbalances. I told you in day 4. You can watch it and you are going to definitely understand it more better. So these gaps are created when price is one-sided, leaving an imbalance inefficiency, we call, okay, behind. That's what we call the internal range liquidity or the fair value gap. Okay, now let's go into the chart example. We are going to understand it more better. Okay, let's see just a little example. We are definitely going to move on the charts. Okay, as you all know, we do it definitely in all videos. Okay, so example number 1. So we have this internal range liquidity definitely. Okay, now our turn is to go to take out these external range liquidity highs. Okay, so with the internal range liquidity, we want to see price to fill it again and then take out these highs. Okay, so and also we got this swing high. That's the swing high. I told you about the swing highs or swing lows in previous videos. You can watch it. Okay, so that's the basic series definitely. So now we have the example that, okay, we have taken out this internal range liquidity, and our next drawn liquidity was to take out these highs simply. Okay, so we have this little saying that once price is going to sweep the external range liquidity, its next objective is to rebalance into the internal range liquidity. But when price rebalances, which were there, okay, the imbalance, its next round liquidity is to take out these highs, external range liquidity, okay, or take out the lows. Okay, it's towards the external range liquidity. So that's what we call the internal range and external range liquidity. But I know that you haven't understood till now. Okay, we are going to charts and understand it in more visible depth. Okay, let's go and understand it more better. Hey yo, so we are on the chart examples. Okay, so we have the external range liquidity mark here. We have the internal range. Okay, so our main goal is to focus on the external range liquidity, but we are going to definitely see what price is going to do in the next leg. Okay, so let's see what price is going to do. Okay, we have that fair value gap, which we have now respected, but we have that fair value gap again, which is the internal range liquidity. So we have to just mark it out, okay, till we take out that high external range liquidity. Okay, so we have that internal range liquidity. Okay, so now we want to see price to fill it and create the highs, internal to external. Okay, let's see what price is going to do. So definitely we have that internal range. Okay, we have filled it. Now we want to see price to take out that high, which is the external range liquidity, of course. Okay, we have to just mark it out. Okay, internal to external. Let's see what price is going to do. Boom, we've taken out the external range liquidity, right? So now we have to just wait what price is going to do. So we have that internal range liquidity. Okay, so we want to see price. We've taken out the external. So now our main goal is to focus on that internal range liquidity. Okay, so that's what we call the internal. Okay, now let's see what price is going to do. Okay, so we filled that internal range liquidity. Now our main goal is to take out that swing high, which is the external range liquidity. Okay, why? Because we have the 3 candles, 1, 2, 3, swing high. Okay, that swing high is going to be the external range liquidity. So let's just mark it out. And now let's see what price is going to do. Of course, it is just checking out. And now we have that fair value gap again, which is the internal range liquidity. And let's see if price is going to take out that high. Okay, so we have simply taken out that high, and now the drawn liquidity is towards that fair value gap. Let's see. Boom, we've just hit the internal range liquidity to external, that the combination of these two main things which we learned before. Okay, so hope you guys liked the video, and hope you guys understood the concept which I've been teaching you in a very simple way. Okay, that's not complicated, that's very easy. If you don't understand it, try to rewatch the videos, and I hope you're going to understand it more in depth. Thank you guys for watching the video, and I hope we are going to be back very soon. Thank you. Goodbye.